DRL has come out with a poor set of numbers. 482 versus 18-hour poll of 568. We are looking at the adjusted number here, so we are trying to compare the like-to-like number. We are not simply comparing same quarter last year, because that was slightly bloated because of forex gain and other income. For the moment, what DRL has reported, if I do a year-on-year comparison, is an uptick of about 482 versus 460. This is versus the 18-hour poll of 568. So these numbers are honestly way below what we were actually pricing in. Now, what has really led to the decline? We'll try and figure that one out. It has to be a one-time charge, or it has to be some big sharp drop in margins. I don't think product prices have really cracked for DRL. So it has to be something got to do with maybe a forex loss. In the run-up to the numbers, the stock's been weak. So maybe markets really anticipated that DRL would come out with good set of numbers. 82 rupees down for DRL. First big result disappointment for the day when it comes to the pharma space. As of now, numbers prima facie are looking way below 18-hour estimates.
Even the revenues have fallen, or rather I should say come in lower than the market expectations. 3,481 versus the 18-hour estimate of 3,600. So we were expecting an uptick of about 8%. That too they failed. While we just heard Darshan talk about as to how the expectation from DRL this time around was in any case not anything big. They were expected to post a muted quarter, but this has been sub what the market was expecting, and I'd say almost in excess of 100 or 120 odd crore rupees off in terms of the PAT estimates. That, of course, is the sales figures for you. 3,480, that is again lower than the 18-hour estimate of 3,600 odd crore rupees. The margins, we were expecting them to almost touch that level of about 24 odd percent, 23.8% or so. But my sense is it would be a quarter of flattish performance by way of the EBITDA margins as well. 21.8% is the comparable figure for the previous quarter. We're expecting the PASI revenues to fall over 40%, and perhaps this has come in a little deeper in terms of a gash. The global generics business was expected to grow by about 35 odd percent, and it was the US markets which were expected to grow by about almost 40 to 43 odd percent. There you go. That's the EBITDA margin for you, 22.4% versus a comparable of 21.8 on a comparable basis. 781 crore rupees. So on the EBITDA front, there has been a bit of a hit that they have taken, because that has come in low, way lower than what the market was anticipating. 857 crore rupees is what the 18-hour poll was throwing up in terms of the EBITDA performance for Dr. Reddy's. The key launches this time around, we were expecting or rather have been this quarter for Dr. Reddy's, Sumatriptan as well as Caduet. So watch out for these two as well. We were expecting some strong sales from a couple of their key drugs, the likes of Vidaza, Relclast, Toprol as well as Dacogen. So would be interesting to see what the key monitorables, or rather the key components of this quarter's performance have been like. I think we can go across and get in an analyst perspective as well. Meeta Shetty, research analyst at HDFC Securities, firstly joins in. Meeta, hi, afternoon. I'm going to firstly read out the numbers to you. The consolidated revenue for DRL for the fourth quarter stands at 3,481 crore rupees, and the net profit is at 48.16 crore rupees.
And Darshan, markets knew that results would not be strong because Q4 historically is not a strong quarter for DRL, and if I do a year-on-year comparison, Q4 was expected to be weak because they never had any exclusive launches.
See, that was right. Even quarter on quarter, the management last quarter itself had indicated that on a sequential basis, sales will come down. So, there's a clean 120 crore miss as far as the top line is concerned, and ours was a more conservative poll this time around, and even on that there is a miss that has come in, but I think the market has factored in the price because this number was pretty much there in the market from the start of the day. If you're looking at the margins have come in almost 100 basis points lower, so 22.4% versus our estimate of 23.8%, so that has come in lower, and PAT has also come in lower on an adjusted basis. If you're looking at it, pretty much at the same level compared to last year, so there has been no growth coming in as far as the PAT is concerned on an adjusted basis. Pretty much if you're looking at the global generics, which was expected to be the mainstay, that has come in much lower. So we were anticipating close to 35% growth. That has grown in just 21%. But on the flip side, PSAI, which is not very big for Dr. Reddy's compared to global generics, we were anticipating a fall of more than 40%. The fall has been close to 30%. What has happened is Dr. Reddy's has actually come dependent more on the US market, and that has happened. The US market has grown in close to 55% when we were anticipating a 43% growth on the US market. Surprisingly, the domestic market has done well for Dr. Reddy's this time around. So apart, Torrent and Dr. Reddy's are the only two companies which have clocked in double digit as far as the domestic market is concerned. The Russian markets has grown 17%, but probably a little bit of currency help should have come in, and Europe has come in pretty much in line with what was anticipated. Mainly on the top line, the problem is that, they didn't have any key launches. The market ramp up for some of their products, they had an auto injector that had come in, Cado was one of the other products. So they didn't go ahead and launch it on the first day itself. They took their own time. They haven't gone ahead and launched Cymbalta yet, so that is another big concern for Dr. Reddy's. And the market share ramp up in some, and no exclusive products were there in this quarter. Currency is something that has aided the margin this time around, but overall I think the market has priced in the disappointing numbers. But clearly, if you look at the numbers, it's rather disappointing on the fourth quarter number.